Hello, traders. In this Christmas edition of your weekend video newsletter for Sunday the 24th, we are looking at the strength in Biotechs and in ARKK last week and the weakness in the Chinese stocks, retail, and the Mag 7. Stocks are overbought, so we'll have to wait until Tuesday to get an idea if we follow through into year end. The New York FANG Index faded last week, giving us mixed results as we consolidated near highs. RSI is still at 70, potential divergence. If we do see that dropping off, we'll let you know. Stochastic turning lower and MACD is topping out with mixed results from these 10 stocks. Apple hung out at highs along with Amazon, Broadcom, Google, Meta, and Netflix. Yet all of them look like they could be ready to pause in the short term, so we need to wait until Tuesday to get a clear direction before putting any money at risk. At the same time, the S&P 500 closed on a doji. RSI is at 70. MACD is starting to peak. Stochastics turning lower. While volume tapered off a bit, we're expecting this week to have lower volume as well, with many people taking vacation into the New Year's holiday. The Dow Jones Composite, heavy in the transports, energy, and industrial sectors, did flag at highs with a doji as well. RSI looks very similar. Volume did taper off. Stochastics is heading down towards oversold for a potential turn, which could turn out to look like the October reversal if we give it a little bit of time. For now, we're overbought and we should wait for clear direction on Tuesday to start the week. The New York Stock Exchange Composite, 2,000 stocks, taking new highs minus new lows. We can see we're still above the zero line. The black moving average line is following through, making higher highs and higher lows, giving us a neutral to more bullish look with advanced decline in the middle panel, pushing higher, making a new high, and blue elder sticks on the composite itself, which shows up when we're looking for a pause in price action. No red sticks at the moment, so this is telling us to be neutral to bullish and just be patient in the short term. Small caps continue to be the shining star, following through. Last week, volume shows institutions have been buying the small cap stocks, in particular the index, with RSI rising on this weekly time frame, while IWN, the iShares Russell 2000 Value ETF, showing a similar strength, RSI rising, volume increasing, and MACD above its signal line. So if you're going to do any kind of trading this week, let's look for follow through in the small caps. With all 9 sectors, small caps are making higher highs and higher lows. Even the lagging energy sector is back above its 50-day moving average last week, sitting right on top of it on Friday. Looking for a follow through. If you're trading IWM or IWN, make sure to check these sectors on Tuesday and Wednesday. And finally, if we check breadth, we can see that the advanced decline percent for the S&P 500, mid caps, small caps, and NASDAQ in descending order are all pointed higher into Friday, with a mixed signal on NIMO, which is fading. I'm looking at that black line. And the summation index continues to point higher, like in the beginning of this current rally in October through December, and again through January and February. NYSE gives us a more bullish look, along with advanced decline percent in the previous chart, along with VIX giving us a bullish signal at the end of the day on this 60-minute time frame. Looking for higher highs and higher lows when this is green, potentially to start this week. So that's what we'll be looking for on Tuesday. As you know, we have a bullish signal in junk bonds and high yield corporate debt. The traders who would be interested in being long are risk averse. So if the markets were starting to tumble, you'd see junk bonds and high yield corporates starting to lose the 921 and perhaps the 50-day moving averages rather than making it to 52-week highs. While the 10-year yield continues to move lower, we did hold right near 3.9% on Thursday and Friday. Oversold. So if this was a stock you'd be looking for a pop at some point, this is something we want to keep an eye on, along with junk and high yield corporate debt on Tuesday to start the week, along with deterioration in the US dollar. As long as this continues lower, with the 10-year moving lower and junk and high yield corporate moving higher, those are bullish signals for continuations, generally more neutral to bullish to start the week. As far as commodities go, the Deutsche Bank Commodity Index is in the lower half of its range. As you can see more clearly on the weekly time frame, volume was a little bit above average the last 2 weeks, but we are below the 10-period moving average on this weekly time frame, so we'd be bearish. While at the same time, the dollar is moving lower, gold is moving higher, as it takes more dollars to buy the same amount of gold. Gold is moving higher as the dollar drops. Volume suggests that institutions have been buying gold over the last 8 to 10 weeks, with no signal from crude oil as it sits on top of the 200 period on this weekly time frame. A bounce here would be bearish for market conditions. We'd look for this to stay in this general area if we're bullish equities. Stochastics and MACD look like they could be turning higher along with a weekly RSI. So just be careful. Keep an eye on crude oil, which is currently near 52-week lows. Consumer discretionary versus consumer staples in this chart clearly looks nothing like the bear market start in January of 2022, where this started to fall off dramatically. Instead, we can see that institutions are positioned more to the bullish side as this climbs. We'd expect to see a peak once they start to position more defensively. Currently not the case. With strength noted in Biotechs, IBB, XBI, semiconductors trading near highs, transports doing well, materials, with all sectors above the 50-day except for utilities and oil and gas equipment services. Most sectors just look overbought and could consolidate into the last week of trading for 2023. Therefore, I would be cautious and wait for Tuesday to get a clear signal from institutions if you're going to trade this week. The IBD50 this week looking pretty strong. Most of these stocks are at 52-week highs. Could see a bit more consolidation. Stochastics not shown is overbought in most cases. Could be turning down. We're watching Carnival Cruise Lines, Royal Caribbean, Norwegian Cruise Lines showing strength into last week. Meta is back on the IBD50. That's trading near highs. NVIDIA consolidating right below 500, as you know, while additional stocks in the security sector like Zscaler, Palo Alto, CrowdStrike, all looking fairly strong last week. It just looks like we're consolidating going into year end, with the S&P 500 gaining more than 16% from the month of October on that reversal, having gained more than 37% since the October low of 2022. That said, here are stocks that are oversold from various sectors. Look like they could continue higher, like Allstate Insurance, DraftKings, oversold, Stochastics and Turning, having faded for the last 3 to 4 weeks. Braze, symbol BRZE, been on the IBD50 for most of 2023. Many stocks on this list like IBM, pulling back to the 21-day moving average. Stochastics oversold, could bounce this week and follow through into year-end. Stochastics turning, volume about average on Thursday and Friday, but this bounce, this three-candle reversal, could be leading to a higher high into the final week of trading for 2023. Molina Healthcare sitting on the 50-day. Stochastics ready to turn. Stanley Black & Decker looking for a bounce just above its 21-day and trending. Looking very strong coming into year end. Pretty popular gift for the dads for Christmas with power tools and the like. On sale this weekend over at Home Depot and Lowe's. Likely to see a follow-through into this last week of trading for 2023. Take-Two Interactive Gaming at the 21-day looks like a bounce. Stochastics turning. Along with WR Berkeley, WRB, Stochastics turning, a bounce off the 50-day moving average, with many of these stocks looking like they could follow through this week. Stocks with rising profit estimates continues to populate that popular IBD scan. You can see many of these stocks pushing higher. Companies that are reporting better than expected earnings going into this quarter, next quarter, and even next year. Most of these trending higher, as you can see, like Block SQ continues higher, Broadcom trading at highs, Broadridge Financial, Builders First Source playing off of the strength that we've seen in home builders. And unfortunately, the issues that we're having with climates, with all the flooding and repair that needs to be completed in the coming weeks, and a company who profits from salvaging vehicles for insurance companies, Copart bouncing at the 50-day, a higher low, volume picking up on Thursday and Friday. Looks like this could follow through. Stochastics turning up along with MACD. Look for these salvage companies and competitors to help insurance companies recapture some of their lost revenues. As this continues to move higher, Copart is identifying those losses, turning into gains for this company in particular at the present time, CPRT. Finally, we have the Dow Industrial 30 stocks. Many of these moving higher, like an American Express, Caterpillar, having reported earnings, remains at highs. Salesforce, Cisco turning the corner, Goldman Sachs at highs. Intel trading near highs. Congratulations, Stephen, on that trade last week. IBM, of course, moving higher. Honeywell trending. 3M, many of the industrials look good. McDonald's trending. JP Morgan. Microsoft trying to get back above the 21-day moving average and stay there. Merck turning from that low at 100 back to 108. Many of these stocks on the Dow Jones Composite look like they could follow through this week. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com. It is Christmas Eve. I hope you all have a wonderful Christmas for those of you who celebrate. And we'll send out a watch list tomorrow by midnight, if not earlier, so we can spend the rest of the day preparing for Christmas here on the East Coast. Take care, and we'll see you on Tuesday. Ciao.